Alright, event trader coming on here. We're getting towards the end of the session. Still watching Brett's short in the Nasdaq. Pretty much hasn't moved. Not a lot of activity here in the afternoon. We had that early selling right at the, just ahead of the open and into the open, and since about that 11 o'clock time frame, we've been trading in a pretty tight range overall. I've not seen buyers look to come back in, and sellers, I don't want to say they're exhausted, but they're just kind of sitting around, basically sitting on that 50-day moving average in the S&P. I got it sitting at 29.31, and of course we are trading at 29.27, so just below it. Taking a quick look at the Nasdaq. That is also close to its 50. The 50-day moving average for the Nasdaq, 76.80, which is basically where we're sitting right on right now. It's 76.82. And then finally, the diamonds, got that pegged at 26.474. So we are trading just a little bit below that right now here at 26.347, about 100 points below. So 50 days been tested across the board, but hasn't really been breached significantly. But of course, we haven't also seen anybody come in to defend this bounce either. It's going to keep people a little cautious ahead of the weekend. Likely keep them out of the markets. A lot of people are probably gone for the day at this point anyway. Taking a look at some of the internals here. Advanced decline line, minus 2,000 on the day. Bearish territory to be sure. Not extremes, though. Extremes would be more in that minus 3,000 level. Put call ratio, pretty steady for the last hour or so, just right around 110. So I get up to 124 around midday, but it's pulled back and really hasn't had much activity in the afternoon session here. The VIX, for its part, got over that 20 level today, hit 2011, but right now it's trading right around 1862, up about 4.5% on the session. So we'll continue to monitor this action going in. Quick look at some of the different currencies. The dollar sitting right at 98 at the moment. The euro trying to test that 111 resistance level. The Chinese yuan, we talked a lot about this. This has been steadily inching higher, sitting at 6,977. So it's just a hair below that 100 level. We got China's FX reserves next week, which will certainly be something we want to keep an eye out on, just for looking for any action there. But again, as I've said, 7's a really key level for the markets for the Chinese yuan. If we see that break over or under 7, I should say. Remember, this is an inverse correlation. So right now, 6.97 yuan gets you $1. So looking for that 7 to 1 ratio. Then that's really going to start leading to concerns about capital flight out of China. I don't know if that's the Trump administration's plan to try to drive the yuan down to that level. We'll see what would happen, but definitely something we want to keep an eye out on for Sunday night. So just want to throw that on your radar here. And of course, again, we get those China FX reserves next week. So with that in mind, I want to take a look at the week ahead. The comment is at 1427 for anybody that wants to follow along. Want to first start off with the key themes, and we'll circle around to each segment and end it with the earners. Scott is off the desk, of course, so he's not going to be joining me this time around, unfortunately for us, but I'll try to do some justice and at least get some names on the radar and some key levels. Taking a look at the key themes, we'll just start off basically in chronological here. Service PMI numbers, which are going to come out Saturday or Sunday night and Monday morning, coupled with any moves in the yuan, and of course any trade headlines over the weekend, will be key drivers for the markets early. We've heard a lot about the manufacturing recession, but services has remained relatively stable, so that's what we're going to want to see play out here in that round of data. The Fed, now there's not a lot on the calendar at the moment for the Fed, but the two speakers I thought were notable is it's St. Louis Fed President James Bullard and Chicago Fed President Charles Evans, both viewed as arguably the most dovish of the Fed members, and these are going to be this is going to be the first message we hear post Powell. So I thought that was kind of interesting. I think you kind of get a little bit of a dismissive tone, though, in terms of the markets and what the two gentlemen have to say, as their opinions are widely known. But it will start helping the Fed formulate their message going into the Jackson Hole meeting, and of course the next September FOMC, which is currently showing expectations for a 25 basis point rate cut of about 25 basis point cut, approximately 85% chance of that right now. Earnings, we'll get into the individual names, but this is the last big week of earnings season. The names are definitely on the lower scale side in terms of impact, Disney probably being the one notwithstanding. A lot of higher value tech names and some low value energy names, so there'll definitely be tradable equities out there, and we'll take a look at a few of them. Looking at the global macro, that's also going to be pretty busy here. The U.S. is relatively thin. We got those service and the service PMI and ISM numbers on Monday, and Friday there is a PPI number, but the real economic data is going to come from the rest of the world, where we got, of course, all the service PMIs on Monday. We got a number of reports from China now. Not all of them have been confirmed in terms of the date, but FX reserves, that's Wednesday, and inflation data, that's Thursday. Then we should be expecting trade balance and new yuan loans, which, again, is yet to be announced the exact dates. We'll get them for you as soon as possible. Germany has a lot on tap with factory orders, industrial production, and trade balance all due out, while the UK will have a busy Friday with industrial production and GDP numbers. This will be the first big round of economic data under new Prime Minister Boris Johnson. And then finally, there's trade. Nothing on the schedule, but we will want to be on the lookout for to see if there's any follow-up meetings between the two sides, that's for sure. There's also the potential for the Huawei decision to come down. So these are all things that we'll need to start looking at. We're also about 2 weeks away from retail earnings coming out, and that will be of importance for people, as we'll start getting a lot of this new round of tariffs is expected to hit that area. So that is what we want to keep an eye out on. On the U.S. macro side, just to again a recap, service PMIs Monday and ISM services as well. We got the JOLTS and Bullard on Tuesday. Wednesday, MBA, mortgage applications, EIA crude, and a June consumer credit number, as well as a 10-year bond auction and the Fed's Evans speaking. Thursday, claims, of course, the wholesale inventories, nat gas, and a 30-year bond auction. And then Friday, we get the PPI. Then the international macro, as I said, starting with the Asia Pacific region and going into Europe, we got the PMI figures. We also have a Eurozone investor confidence number out Monday. Japan average cash earnings on Monday as well. Tuesday, Australia's RBA's got an interest rate decision, looking for another round of cuts there. Germany factory orders as well. Wednesday, the China FX reserves. India has their own interest rate decision, and we get the German industrial production numbers and possibly China trade balance that evening. Thursday, the ECB minutes from its last round of meetings. Definitely could be of importance there. Possible to get the new yuan loans, as well as money supply from China. Japan's Q2 GDP, the preliminary look, will be out, and then China's inflation numbers out that night. And Friday, August 9th, we get German trade balance, French industrial production, and that slew of UK data that we were talking about earlier. Still pretty quiet on the conference front. One thing to remember, Congress is in recession at this point, so not going to really get anything on that headline front. So with that, let's go and take a look at some of these earners here and see if we can't find any news of note. Sorry, just correcting one thing in my comment there. Alright, so on the earnings front, Monday morning we've got cars.com, used car sale company. Let's see how they're doing. Get up some of these charts. This one's been getting hammered as of late. Been on a pretty steady decline since last June, rolling from 31 down to that 17 level. So this has nearly been cut in half. Today it popped down to all-time lows at IPO last in June of 2017. So this is the lowest level that we got for an for this. I guess you can't even really call it a recent IPO, but 2-year lows here. You can see it broke down below. So that's ahead of earnings. Going on right now. Next up, Diamond Offshore. Pretty weak space here as well. Diamond Offshore and Rig. Those deep water drillers just don't have a good time when oil prices are as weak as they have been. So been looking into that business, but it's two pretty poor names that we're starting off with here. Next up, Tyson Foods, TSN. This is a name that was at the center of the trade wars, but seemed to really recover from those losses. And good looking chart here is bouncing up. The question is, of course, whether or not you can find a double top at that 79.82 area. This marks the highs from back in December of 2017, but more recently it's been a tight trading range for Tyson Semi. Going across here. Hold on a sec. Give me a quick second here. Scott, it looks like he's back around, so I'll call him in. Alright, Scott should be jumping in 2 seconds, so I'm just going to continue on here. So Tyson Semi, as I was saying, is taking a look at... Hold on a second, just want to see if we got him in here.
Yeah, Gav, hey, how are you?
Yeah, I'm doing good, It's your day off, Scott. What are you doing?
Yeah, my tickets to the Cubs game fell through.
No. Well,
Yeah, so.
At least it's not a beautiful day out, right?
It's probably the best day of the year to go to a Cubs game. Oh, well.
Yep. So, anyway, I'm on Tyson Semi right, or not Tyson Semi, Tyson Foods.
Tyson
sorry.
Foods. Yeah, I saw the tweets, the move on the tweet about the meat.
What move on what tweet with what meat?
Didn't Trump tweet something about the beef agriculture?
Oh yeah. That doesn't really have much to do with Tyson, as far as I know. It's just farmers being able to send out more meat products to Europe. Small side deal that they did. It's very tiny. It didn't really even move the markets, and he didn't say much about China at the time, outside of making a smug comment about not doing so good as per usual. But this TSN, like I said, it's got running into resistance at that 82 level. It might be a tough print to get through given some of the macro conditions that we've seen the last few days here.
Yeah, for sure. But it's actually holding up okay. It's nice consolidation in the last 3 months or so. Are you running? They have earnings next week? So
they do. Yeah. I'm in the midst of running through the earnings week ahead here.
Yeah. So you got to just look for that little breakout into new high ground above that $83, $84 area, and it'll look good to go. It's one of the stronger performers year to date. A little bit of a pause here in the last 2 or 3 months. It's more wait and see mode, but it's got potential.
All right. Next up, we're going to take a look at Avis, which they've been doing a little bit better lately. There's been signs of pricing improvements coming from from the rental car companies area. Obviously, Uber and Lyft and all those names have really been having a pretty big impact on them. But as we can see with Avis, they're trying to get above that 37 area right now. I haven't been able to with much success, but stock didn't really get killed the last 2 days, that's for sure.
Yeah, I think that's a good assessment there. I mean, it's been holding up all right. I'm not really big on trading any of these rental car stocks, except for Uber and Lyft seem to be stealing all of the thunder. But this one's definitely another one that's got potential to break out to fresh 52-week highs above that $37 resistance area. So keep it on the radar. I'm sure the short interest is really high in this too, right? I'd imagine.
Let's take a look at it in a second here.
It's just they feel like these Budget and Avis have had a pretty high short interest.
I feel like it's gotten washed out a little. It's at 9%, 74 million float.
It's not as high as I thought. Okay.
Okay. Next up, we got another semiconductor play here. We've certainly gotten our fair share of these reports, but KLAC, KLAC, that stock was seeing a nice rally breakout up to that 142 area, but since then pulled back about 9 points, with the rest of the semi space getting hammered on these trade headlines.
Yeah, I mean, I mentioned this earlier, about a week ago, last Friday. Semiconductors are just on fire, but they just look like they got way too far ahead of themselves in response to the Texas Instruments move, as well as Teradyne and Taiwan Semi and all those good names there. But they just started getting way overextended to the upside, and then here we are this week with all of them coming back to reality a little bit. Still strong uptrends in context of the June-July activity, starting to pull back to some of those highs from the spring, and bringing some 20-day moving averages back into play. So they could potentially stabilize. As for KLAC, it's right, pretty much just where I described, right around 133, 130 is a key support level that you're just going to want to maintain there ahead of earnings next week. So.
All right. Next up, we're going to take a look at SHAK. 27 million float, 15% short interest, and certainly the shorts have been taking it on the chin here as of late. Pretty rich valuation, 102 times forward PE.
102.
Yeah.
Wow.
Price to sales 5.7, but this is a restaurant. This isn't as much of a growth tech name, so that forward PE has got to be respected. Stock is up at the 75 level. It's just been pretty steady since hitting those low 40s in late December of last year. So one of the better performers, broke out following its last earnings report above the 61 level. Now we got it trading at 75. Hasn't really seen much of a pause in its rally here.
Yeah, restaurants are hot. I mean, did you see QSR today?
Yeah.
Burger King and Tim Hortons. Yeah. That bucked the entire market's sell-off this morning. Just strong continuation of further upside gains there, up about $4. McDonald's has been strong. Yum Brands has been strong. Chipotle has been strong. Starbucks has been a leader in this market year to date. We've been talking about these names for a couple months now, and Shake Shack's no different. Although I've never been to the actual restaurant and had any of their burgers or anything.
I was there. I
can't comment.
I was not. Honestly, I think Shake Shack is one of those names that it's in New York, and there's so much money in New York that it's just impossible for it not to get bought.
I've always been disappointed in Potbelly stock, PB.
Yeah.
I mean, those sandwiches are fantastic. Salads are good too.
I guarantee if you would switch Potbelly and Shake Shack, those stock prices would flip.
Yeah.
Because you got a money manager with a lot of money who loves going to Shake Shack every day. He's buying that,
yeah, I suppose.
So.
But yeah, it looks great. I mean, if it does pull back in, you got support around the rising 50-day moving averages at 68. Otherwise, it looks like blue skies above.
All right. Next up, we got Take-Two, which has rallied back and recovered most of its late 2017 losses at this point. trading right around 121 here. It's made a nice break above its 200-day moving average following its last earnings report. But some mixed results for EA. Might have a little bit more skepticism around this space, especially after the stocks rallied about 25% over the last 7 months or so. You got any thoughts on Take-Two up here at this at 121 level?
Out of the top three, EA, Activision, and Take-Two, it's the one to own. It's been the best performer for the last 4 months. It completely sidestepped the May correction, and it's just continuously to grind higher. And it's funny, if you go back and look at any of those stocks on a chart that avoided the May corrective phase and showed relative strength during that time, whether it went sideways or whether it edged higher, they were just dominating here the last 2 months going into their earnings reports. So again, that's one of the key factors I'm always trying to highlight, is trying to find those stocks that stand out against the broader market. When it zigs, you want to go zagging on those names. So yeah, it's definitely it's one of the best stocks out there right now in that space if you like it.
All right. Next up, we are going to go with one of the more interesting plays out there. I know Trend and Scalp, I think, are involved with this one, but TLRA, TLRA. It's a video advertising play similar to ROKU and TTD. And it's really been falling on a lot of people's radars. I mean, this stock has just been rallying nicely, as you can see in that chart. Now it's at 886, hitting its best levels in about 5 years here. I didn't realize it was around for that long, to be honest. I was kind of expecting it IPO'd all the way back in 2013. I thought it would have been more recent. 44 million float, only about 3% short interest here. Trades at only 6.7 times price to sales, so certainly not an outrageously priced company by any stretch, and has really been parabolic as that after TTD, a lot of people have been wanting to get involved in that space. You got any thoughts on this TLRA?
I've never really tracked it before until Craig Trend Tracker brought it to my attention. Believe it or not, I think it made my the TA page scan zippers, which is the low price stocks under 20. It did make it back in the spring when it had that nice run up between $5 and $8, and it's kind of subsided since that consolidation's been underway here. But so far, it's really decent move there. I mean, they had a breakout yesterday, so that's the only concern. Because where was it off of? Broke out yesterday following strong results from another ad tech player, Rubicon. So it jumped with Rubicon. Like we've said before, we don't when stocks break out above key resistance levels ahead of their earnings reports, it becomes a little suspect, because now the burden of putting up good numbers is there. Otherwise, it can easily retrace back. So, but overall, I mean, this looks pretty solid above $7.
All right. Next up, we'll take a quick peek at Hertz, similar to Avis, but an uglier chart, I'd probably say, Scott. Any quick thoughts on Hertz?
It's ugly. It's just as ugly. It's the ugly of the two. There you go.
Fair enough. It's been all downhill ever since OJ stopped being the spokesperson.
What was that, like 30 years ago?
Probably.
It had to be 20 at least. All
right. Just real quick updates. I'm not sure if I read it, but Brett ditched the NASDAQ short, was just going sideways on him. His plans for his WTI crude, he's got a quarter-size September WTI crude future short on. He's going to keep it on over the weekend with stops at 56.05. So he did tighten his stops up a little bit there. So please trade accordingly. Next up, we are going to take a look at Match Group, which is, of course, all the Tinders and Bumblebees, all that stuff there, Scott.
What the hell is a Bumblebee?
The one site, the dating site.
Really? I've never heard of that one. Not that I'm in the dating scene, but
when you're married and 5 kids, you don't have time for the mistresses and stuff, right? So it also it was IAC owns part of it. So all they own Tinder, Plenty of Fish, Medic, OkCupid, Hinge. So I don't know. I know Craig's pretty high on the stock. He's been involved in it. It's been a really nice winner for him too. I think he's involved in it since the 30s here. So nice doubler on that one. Pretty steady upward trend here, but this one always seems to have an issue around earnings where they just have pretty high expectations given the stock run up in the valuation. Let me see if I could find it. It's trading at 37 times 4P and 11.95 price to sales. It's not outrageous, but obviously pretty steady upward trend here in this name.
Yeah, and I'm showing a 50 million float with about 35% of that is short. So I would almost disagree with you. If the shorts are piling in on this one, they probably think that those numbers are a little bit outrageous there. But again, price is key. And this one has just been really a phenomenal performer year to date, almost up 100% off the December lows there. Strong uptrend above the rising 50-day moving average, has recent support right around $74, $73. I'd say it looks good overall above 70. So going forward, just keep it above $70.
Yeah, this is one, Scott, where I'd rather be ignorant and long than smart and short.
Yes, it's good to be lucky.
Yeah.
If you're right, yeah.
Or understanding stock makeup and short interest.
Yeah.
Next up, Papa John's, PZZA. This one had a nice little run when there was some expectations for activist investors and M&A, but it's back down below its 200-day and 50-day moving average. Chart looks a little weak. We've talked a lot about restaurants out there and how good they've been doing, but obviously Papa John's had some bigger issues on the marketing front there that's really been hurting the stock, and just ugly looking name. I'm not sure I'd want to own this one, and would even be a little bit more interested on the short side, I think.
Yeah, it's not a good performer by any means. Massive multi-year downtrend. If it can't hold $40, it could be under further pressure to the downside there. It's about 25 million shares in the float, and I think I see a pretty high short interest.
25%, so it kind of flies in the. So not looking to short it, similar to what I was saying with Match.com here.
Yeah, but like I said, I've said the same thing too. With high short interest, you need a catalyst to really kind of get
scare people,
to scare people and get them covering. So in the case of the earnings, usually you need some sort of earnings that are good enough to get the price action above resistance levels. And right now, I'd say the resistance for PZZA is right around the 200-day moving averages in that $46 to $48 vicinity. If it starts getting through there, you're going to probably get a squeeze up through 50 for sure. If it disappoints and it's just more of the same or worse, well, then the shorts are just going to press even harder, and you're going to see this thing dive down to the $40 or lower area.
All right, next up, Scott, I know you were mentioning this one was on your short radar, but Pioneer Natural Resources, PXD, oil and gas play. As I was mentioning, there's a lot of oil and gas names out next week. So it's an interesting dynamic next week, Scott, because you got a lot of high-priced growth names on the tech side and a lot of really cheap energy names. So curious to see how that dynamic plays out over the course of the next couple of sessions. But PXD, I know you had mentioned that you liked it as a potential short here. Is that still the case?
Not right now down here at this moment. I would have preferred, obviously, to be short a couple weeks back, but it's just underperforming. It's in the energy space, and we all know that that's been underperforming for quite some time here. To actually be short the breakdowns, what we've learned is very difficult to do because the broader market itself has still been pretty strong year to date, so we haven't really seen any sort of rollover. The way to play all these shorts is really to fade each one of these rallies once they started to show some signs of faltering and then rolling over. Now it becomes evident to me, of course, but I managed to capitalize a little bit on a few trades here and there in the energy space. But this one, it's breaking down below that key support level, 130. It might bounce back a little bit ahead of earnings, but it's got a lot of resistance to fight through. It's got a lot to prove, and I don't think I know they're probably different industries, sub-industries, but ExxonMobil got a poor reception there to its earnings report. So did Chevron, CVX, and ConocoPhillips, which had earnings a few days ago, earlier this week. That actually gapped down, and we caught the reversal there, but then here it is today, just completely giving it all up again and taking out to fresh multi-month low. So this whole group is really still suspect and just not being well received at all. So you got to keep that in the back of your mind.
Yeah, interesting too, because at the very beginning of the season, saw some decent reactions to Schlumberger and Halliburton, but they've quickly all been given up. Next up, we got Solar Edge, SEDG. Of course, its peer Enphase has just been going parabolic. Did you see that stock now, Scott? It's at 29.
But after earnings, where's it? Oh, wow, yeah, nice
follow. 29, yeah, I'm just kicking myself on that. So here's the interesting thing. Enphase forward PE 44 times, price to sales 9.1 times. This is an 84 million float with a 15% short interest. SEDG trading at 17 times forward PE and a price to sales of 3.15 times. So trading at about a third of the valuation of ENPH. It's got a 45 million float and 10% short interest itself here. So they post a similar quarter to Enphase. I like this one for really getting going and breaking out higher here. Definitely the solar space has been pretty hot. First Solar had a nice bounce back today, but SEDG, if that rips above 64, we could really see this one make a push higher based off what we saw from Enphase here.
Yeah, solar stocks have been hot all year long. And with a couple of them that have already reported earnings, it's just been more of the same and continuously seeing bids come into them and support them off of key levels and drive prices higher. So I would suspect it's more of the same here. The only thing I show different is that Enphase looks like it's been growing its sales, whereas SEDG seems to be diminishing a little bit in the sales growth there. It's real strong though. I mean, it's 30% year over year, but I'm showing a little bit of a decline on from very high levels. So I don't know.
Yeah, that's
just something to keep in mind.
To watch out on. And I'm not saying that we're going to see this match it for a 44 times forward PE and 9 times price to sales. I'm just saying, if you're looking at it and you're probably thinking, well, this run's nearly done, I don't think that's the case for this. And again, Enphase did post really strong results, so you want to see that. They had their new inverter product that's definitely been helping boost results there on that side. So next up, we've got probably the biggest company for next week, and that is Disney, DIS. Been trading in a pretty tight range the last couple of sessions here, between 140 to 145. We're still a quarter away from the Disney Plus launch, but the results there have been great. Another strong slate of movies in the quarter form, so curious to see how that pans out. But I'm still long Disney from that 109 area, and I have zero plans on covering it at this point.
Yeah, I'm still holding a piece of it from about 140, 141 from early July. Took a little partial profit a week ago, up over 145, 146 area, but it looks great. It's one of the leading stocks in the Dow. It's S&P, everything, and a lot of these ETFs, communications ETFs. Just a really strong outperformer the last couple of months, holding on to the 50-day moving average, which is around 139 right now. So I would, it's for theirs. It's theirs to lose. I mean, they have to come out with something really bad here to kind of gap things down below 139 and see a significant size sell-off. But they have so many products and movies, and it feels like every weekend I'm sitting there talking to somebody. They're like, "Oh, well, Disney owns that. Oh yeah, Disney owns that. Oh yeah, Disney does that too." So they got their hand in everything. So.
Yep. All right, next up, we are going to take a look at the New York Times, NYT. out Wednesday morning. Another parabolic move, certainly benefiting from President Trump in office. They're railing against him. It's definitely led to a steady rise in viewership there and subs. So another name that just kind of continues to march higher here, Scott. A little bit of resistance at this 36 area, but I would hardly call it meaningful at this point. So we'll see if this gets wrangled in. But some tougher comps too going forward. But just been a nice steady performer as of late.
As of late, yeah. I mean, I'd say pretty much since end of 2016, early 2017, this thing just started breaking out over resistance at 13, 14, 15, and then it just really hasn't looked back since. It continues in a strong monthly uptrend. This year so far, it seems to be more in a consolidation phase between 32 and 34, 34-ish. Yeah, 34. So it's pushing that up against those multi-year highs again. I'd say the path to least resistance is to the upside. Does this pay a decent dividend? I don't even know if these stocks pay dividends anymore.
New York Times, let's see.
Nah, it's got nothing.
0.56.
Yeah.
All right. Next up, Applied Optoelectronic Fiber Play. It's been really...
What's that ticker?
AAOI is the ticker. Beaten down fiber optic play. But 18 million float and 42% short interest certainly piques my interest for a possible short squeeze on any sort of surprise that the company could provide here. I believe they do have significant exposure to China, so I'll have to double check that. But this is one, any surprise higher, and this thing could really get going here on a short squeeze.
Yeah, I'm looking at my daily chart here, and I have a trend line that's been going down pretty much since the peak in 2017 at 100. And I stopped drawing it back in March. So I have nothing on my charts for the last 5-6 months. It just completely stopped that downtrend line from March. And I think at that point I was like, why am I even bothered wasting my time with this one? So now looking back at it, I mean, really, it's just consolidating down here below 10. Do they make body cameras? What do they do? I can't remember. Just the fiber optic?
Fiber optic, yeah.
I don't know what to tell you.
Yeah. So,
sorry.
I mean, they just make all the lasers and transmitters and turnkey equipment. So.
Yeah, short interest is through the roof. I mean,
that's what I was saying for a squeeze.
It is, but again, you need something disruptive to happen.
Exactly.
If you need to scare. Yeah, I mean, the shorts literally have to get scared out of their pants that something's going on and turning around this company. Even if it gapped up 5%, 10%, the shorts are just going to reload if they've been with the high short interest like that. Yeah, they gotta have to come out with some fantastic, turnaround news, or who the heck knows? I don't know. Management needs to do something to shake things up. So.
All right. Next up, we got Booking.com, formerly Priceline, of course. BKNG is the ticker. This is one that's had some aggressive selling on its past couple of earnings, but it continues to bounce back, and really it's just been cutting a pretty wide range between 1650 to just under 2000. We'll call it 1950 over the last few months. But looking for a possible bounce back here. It got up to that 1950 area just a few weeks ago or just last week before seeing a little bit of selling coming in. Strong consumer you would think would bode well for him, and we saw some decent numbers out of Expedia and Trivago. So, a little bit more upbeat expectations and higher expectations for Booking.
Yeah, this is a name that I look at, but I don't trade ever. So it's such a wild stock to trade. Yeah, those levels you gave are fine, Gav. I don't really have much of an opinion on it, of what direction it's going to go. It always seems like it has to be faded, whichever way it goes. You look at the price action in this chart. If it drops 10%, it's got to be bought. If it goes up 10%, it's got to be sold. And the stock trades less than 500,000 shares on average, and its average daily range is somewhere around 35 to 40 points a day. it's just too wild, too thin of a stock for me to really get a grasp on.
Yeah. All right, next up we want to take a look at what's arguably going to be one of the more volatile names, and one that a lot of traders have their eyeballs on, and that's, of course, ROKU, ROKU. It's sitting right on its 100-day, or 100 psych.
Oh, yeah. Oh, yeah.
Well, yeah, 50 moving average, which also corresponds with the 100 psych.
Right. Okay.
So another one of those that television plays here. Involved in the advertising space for that. So want to keep an eye out, see how the streaming platform is producing, but some pretty high expectations here. Another low float, high short interest, 81 million float, 10.4% short interest. You've been trading Roku lately, Scott?
Not lately. I was trading it a lot past after the last earnings report back in May. Caught a nice few trades there between May into that June run-up. And then I don't remember if I was trading it back in the early July pullback to the 50 or not. I don't think so. But overall, the last 2 weeks, nah, I haven't been touching it. Just been watching it. I put it on the radar a few days and just said, hey, if it gets to this level or if it breaks through here, I'll consider getting involved with it. But it never got to those levels. So I've really just been kind of gun shy with this one and sitting back watching it. It is a leader on the focus list. It's been a leader for quite some time now, almost a year, I'd say. And I still have no clue exactly what they do. So,
I mean, they make those streaming TVs, right? So
it's like a box.
Yeah, well, no, it's the actual TVs that they make. So
okay.
They also have Roku boxes, but and then they do a lot with the video ads that are provided on it. So it's basically smart TVs.
I don't watch much TV. I'm more of a movie guy. So
yeah. Okay. And then a few other names out there. On Wednesday, we got Melly, Sono, Zillow. Then we're going to move on to Thursday here. Few names of interest: Kronos, Light, the TW Play, TradeWeb, the other Chewy, CHEY, Overstock. But the one I wanted to talk to you about with Scott is Uber, UBER.
Can I back up 1 second?
Sure.
TradeWeb is actually one of the few stocks on my quote screen that's trading up about $1.25. And when I look at the daily chart of that, it has pulled back the last couple of days to the 50-day moving average, right around $45, $44, which lines up with support from May and June. So you got a nice little level here for TW in around $44, $45 that it seems to be showing. So this might be due for some sort of pre-earnings pop going forward. I like the name a lot too. This was one of the higher ranked IPOs when it made its debut from our analysts here. And they basically provide software for bond trading desks, giving quotes and making the exchange of bonds and transactions much more simpler than, I guess, the archaic way of however bond traders were doing it. I'm not really sure, but this apparently is very well-used software amongst the bond community, which is massive.
Yeah, a lot of the big banks, Citigroup was one. I think Bank of America was another where they singled out the TradeWeb. A lot of them have investments in TradeWeb. They were seeing pretty big gains from it. So
I like the story, and the technicals are great for an IPO. So got a nice support there at 44, 45. All right, we can go back to Uber, you said?
Yeah, Uber. This is one, I guess we could say it was breaking below its 50-day moving average there. Not that it's all that well established, but part of the bigger market sell-off, dropping from 43 down to 40, perhaps some concerns. Obviously, we want to see how big of a loss they had. I want to say it was $1 billion last quarter, something in that line. But how they're managing their costs, revenue growth will certainly be key for which direction Uber goes here. Definitely looks like the sellers have parted ways, though, so it's got me interested in looking for a little support at 40. You're not still involved with this one, are you, Scott?
I am. I have a very small swing balance. I picked this one up back on day 3. So it dropped on day 2 pretty aggressively of its IPO there, and then it started shooting back up through the $39 area, and that's where I started jumping on board. I think I actually picked it up in the 38s if I go back and look. And that I picked it up there, and I capitalized on the quick jump, a couple points over the next few days, and then I just basically said, all right, I basically have a nice cushion here to just hold on to this piece and just see what happens going forward. And it's done okay, but kind of mostly choppy action the last couple of weeks here, between $42 and $45. I tried adding to it a week ago, last Friday, because I thought the momentum was there going into month end. And ahead of this next week's earnings, I figured maybe we get some more upside in the market. Everything looked like it was going to break out. They had the small caps looking like it was going to move higher. You had the major indices near the highs. And I just thought this was a name that was finally going to break out of this multi-week consolidation and make a nice run into month end. Then, of course, everything goes awry with Fed talks and Trump tweets or whatever else you want to say, and then stock reverses with the rest of the market here and comes under pretty aggressive pressure. So we get stopped out of the add-on, but I'm still holding that final balance from the 39-38 zone. So sitting with it for now. I'm not going to probably do anything. Maybe I'll try to pick up for a bounce for a pre-earnings pop off this 40 level if it sticks. But otherwise, I'm just going to be just sitting tight with it.
All right. Well, Scott, that's going to do it for us here. We got about 10 minutes until the close. Mm-hmm. So thanks for jumping on. I'm sure the listeners will appreciate that. And we're going to be posting a replay of this here shortly.
Cool. All right. Thank you. Yeah.
Did you have anything to add?
No, that's it. I was just going to say have a good weekend.
Hey, you too.
Talk to you next week. All right.
I'll talk to you on Monday for sure.
All right.